For 17 years, since Satoshi Nakamoto launched Bitcoin, crypto has been one of the purest free markets on earth. If you build something useful, people will use it. If somebody builds something better, people will switch to it. The companies with the best products, the most liquidity, the biggest communities win, or at least usually. And that is how crypto has always worked, or at least that's how we thought it worked. Because today, the world's biggest crypto exchange is finding itself on the outside looking in. Binance. Not because the users abandoned it, not because another exchange suddenly became better, but because Europe introduced something crypto has never really had before. Permission. Everyone seems to be focusing on the story being about Binance. I don't think that Binance is the center of this story. I think this is about something much, much bigger. Has MiCA fundamentally changed how crypto companies compete? Because if regulation becomes part of the competition, then the market no longer decides the winners on its own. So let's separate the headlines from the reality. MiCA, or the Markets in Crypto Asset Regulation, is Europe's attempt to create a single regulatory framework for crypto. Instead of every European country making up its own rules, MiCA is creating one framework that authorised firms can passport across the European Union. In principle, you could see this as a really positive step, since the industry has essentially lacked regulatory clarity since inception. Well, apparently, this is what clarity looks like. As we can see here from the European Commission's website, it highlights the regulation on markets in crypto assets. MiCA covers the crypto assets and related services and activities that are not covered by other union legislative acts on financial services. This dedicated and harmonized framework for markets in crypto assets will support innovation and provide proportionate treatment of issuers of crypto assets and crypto asset service providers to scale up their businesses across borders, provide significant benefits in terms of cheaper, faster and safer financial services and asset management. And here we can see the legalese of the framework. Now, to be clear, if crypto was going to support stablecoins, tokenization, digital payments, real-world assets, AI agents, and trillions of dollars of institutional capital, some form of regulation was always inevitable. So this isn't a video arguing against regulation. It's a video asking what happens once regulation starts influencing competition. Because one thing stood out to me. If Binance is the biggest crypto exchange in the world by liquidity and users, and if regulation simply rewarded the largest incumbents, Binance should have been the first through the door. But instead, the picture is much more complicated. As Reuters reports, a spokesperson for Binance, which has 300 million customers worldwide, earlier said it had been pursuing a MiCA license and had worked with regulators for over 18 months. Binance believes it has met the requirements to be MiCA authorized. It understood Greece's Hellenic Capital Market Commission had completed its review of the application and it was considered compliant. CMC has given no formal indication of the contrary. So why then has Binance been refused a MiCA license? I think this is telling us something incredibly important, and I think that this is the biggest misconception surrounding regulation. Most people think it just creates rules, but it doesn't. It creates licenses, and licenses create permission. Permission to operate, permission to market, permission to onboard customers, permission to serve institutions, and permission to expand, in this case, across Europe. Just think about what that actually means for a minute. One license, granted by one regulator, can suddenly unlock access to almost 500 million consumers across the European Union. That's extraordinary, because permission suddenly becomes very scarce. And whenever something becomes scarce, it becomes an economic asset in its own right. Crypto companies are no longer just competing to build the best products. They're competing for permission. And that is a completely different game. Which brings us back to Binance. Because I think most people are asking the wrong question. The question isn't, why doesn't Europe like Binance? The question is, what are regulators selecting for? Consumers are likely to ask very simple questions. What exchange has the lowest fees? What exchange has the most liquidity? What exchange offers more local currency support? Or what exchange offers the most tokens? Which one is the easiest to use? But regulators are asking very different questions. Who owns the company? Where is it incorporated? How strong are its AML, anti-money laundering, controls? Can we supervise it? Can institutions safely interact with it? Does it fit into the wider financial system? And if you notice something, those are not consumer questions. Those are infrastructure questions. And Europe has issued a statement clarifying expectations for how unauthorized crypto asset service providers must wind down activities. Regulators aren't asking questions about who is the biggest exchange or crypto asset service provider. They're selecting companies which they believe are suitable to become part of Europe's future financial infrastructure. And that is a very different conversation. Now, this is where the story becomes really interesting, and it might be worthwhile paying particular attention. Markets don't just price today's earnings, they price tomorrow's opportunities. Every investor asks the very same question. How much can this business grow? How many customers can it reach? What markets can it enter? And suddenly, regulation becomes part of that equation. Imagine two identical exchanges. Same technology, same products, and the same customer experience. One receives permission to operate across Europe, and the other does not. Immediately, their institutional opportunities are no longer the same. And if future cash flow changes, valuations cannot change also. Now, just to be clear here, I'm not suggesting that regulators deliberately move markets, but licensing decisions can inevitably influence them. That is simply how financial markets work. And whilst doing my research for this video, I discovered something that I think that most people probably don't understand yet. MiCA isn't controlled by one single European regulator. It's a network. National regulators issue licenses. ESMA coordinates supervision, and information flows between them. One country's decision can suddenly affect the entire European market. That means choosing where you apply for authorization is no small decision. One unsuccessful application can leave you watching competitors expand across the market whilst you have to wait. One successful application can unlock passporting rights across the entirety of the European Union. And that's why this story is not even just about compliance. It's about access. It's about permission. Permission to access users, to access institutions, to access capital, and to access the opportunity. And just to be clear, I couldn't find any evidence of some hidden conspiracy. The research actually uncovered something else. No secret shareholdings, no family relationships, no smoking gun. But what I did find is something arguably even more important. Large financial firms don't just build products. They hire lawyers, compliance teams, public policy specialists, former politicians. They participate in consultations, they engage with regulators, and they shape the environment they'll eventually operate in. That's not unique to crypto. That's how almost every mature financial industry works. They engage with regulators. They shape the environment they'll eventually operate in. That's not unique to crypto. That's how almost every financial industry works. And if you've watched this channel for a while, you'll know this isn't the first time we've spoken about infrastructure. A few weeks ago, we looked at what Wall Street is actually buying. And the answer wasn't just Bitcoin. It was exchanges. It was custody. It was stablecoins, settlement, tokenization, the rails behind the finance. Now ask yourself a different question. If you're BlackRock or JP Morgan, Visa, or another global financial institution, who are you more likely to build alongside? A company regulators are comfortable integrating into the financial system, or one that is still trying to obtain permission? Suddenly everything starts connecting. MiCA isn't just about exchanges. It's about who gets to build Europe's digital financial infrastructure. Who issues stable coins? Who provides the custody? Who settles transactions? Who tokenizes assets? And who becomes the trust layer beneath the next generation of finance? And that is a much bigger story than any one single exchange. So, is MiCA deciding who wins crypto? I'm not sure that is actually the right question. I think a better question to ask is, has MiCA changed how crypto is won? At least in Europe. Because as I said at the beginning of this video, for 17 years crypto has rewarded the builders. Biddle being one of the famous phrases within the crypto industry. The best products that attracted the most users, the biggest communities became the largest businesses. The market itself, a decentralized market, decided who won. Now MiCA doesn't necessarily end that, but it has introduced something that crypto has never really had before: permission. And again, one of the famous phrases of the crypto industry, one of the ideological themes that has always been considered one of the most important and compelling within crypto has been permissionlessness. MiCA has changed the ballgame with respect to permission to operate in Europe, permission to expand in Europe, permission to integrate institutions. And once permission becomes part of the competition, the market alone no longer decides who wins. It shares that power with regulators. Now, whether you think that's good or bad, it is one of the most important shifts, in my opinion, that our industry has seen since Bitcoin itself was created. So maybe the real story isn't that Binance struggled to obtain permission under MiCA, but maybe it's that crypto is entering a new phase again. A place where success is no longer solely decided by innovation, users, liquidity, but increasingly who regulators are allowing inside the new financial system. Some people may think this makes MiCA look good. Others may think this makes MiCA look bad. But it definitely raises the question, who decides who wins from here? Because if regulation is becoming part of the competition, then understanding regulation may become just as important as understanding technology. And that as well may be one of the biggest things that crypto has ever experienced in terms of changing. So what do you think? Do you think that MiCA is simply protecting consumers? Or is it quietly reshaping crypto's competitive landscape? Let me know your thoughts in the comments below. And as always, if you've liked this video, I'd really appreciate it if you liked it. And if you want to see more videos on crypto, blockchain, capital markets, AI, and more, please consider subscribing to my channel.